All right, what's up, everybody? Another day, another. I always keep on saying like it's a video vlog.
I keep thinking you're gonna say it's another dollar.
Another day, another property tour. But anyway, welcome to LV Home Experts. So today, on today's topic, we're gonna talk about you're not ready to buy a home here in Las Vegas. That's right, you are not ready to buy a home here in Las Vegas, and we're gonna be talking about this and why this is important. So today I have my guests and also co-host too, as well as Dan French, the guru of real estate financing. What's going on, bud?
What's going on, guys?
Oh,
how's everybody out there?
I might have to kill that light. You look too yellow.
Yeah.
You're overexposed. So
wow.
Yeah, you know what? I'm gonna kill that light.
Yeah, it does look a little bit light. I mean, I'm white, but I'm not that white.
Dude, you're like clear right now. Let me get rid of that light.
Yeah, it's crazy. Now this weekend is coming up quick, and last weekend, we did a lot of stuff as usual around the house. I know we did something on Saturday, and then Sunday I ended up going out to eat, and just kind of doing some Christmas shopping. I'm starting to do that now.
Oh, you did some Christmas shopping?
Yeah, I don't want to be the person that's waiting until the end.
Yeah, I mean, it's kind of crazy when you do that because, matter of fact, I just did a video the other day. Mm-hmm. I think it was on Sunday. And it's starting to get crazy right now in the malls.
Yeah.
And I literally, me and my wife, we found a pair of like one of those gym pants for my niece.
Okay.
So we found two of them on the rack, and it was like a whole section. It was like $17.99, right? Check this out. So JCPenney's at Meadows Mall, it was like so like busy, right? The line. And I didn't want to wait in line, so I was like, come on, we're gonna go to this line. So there was only one person that was in front of me. It literally took us 15 to 20 minutes just to get to the counter because of the worker. They were just working very slow. I finally get to the counter. We ring up these pants. They were saying it's like $36 or $40 per pants or something like that. And we're like, it says it on the rack, it's $17.99. So the lady was like, no, it's $40, whatever. So my wife was like, you have it on the whole rack. So they had to walk back there
and check it out.
Wow. Grabbed the price tag off the rack, came back and basically said, no, it's not $17.99. We're going to have a call management. So they contacted management. After I was talking to the manager, say, look, can you honor this? And she said, oh, no, it's not my fault. It's one of the employees that put it up on here. And we basically explained to her, like, you have a whole section, right?
Yeah.
That says it's $17.99. And we literally, like, stood in line for, like, 30 minutes, dude.
Did they give you the price?
No, they didn't. So we decided not even to buy anything because it just wasn't worth it.
So you're saying
there's
more people out there buying it, huh? Would you say? Or
yes, I mean, there's a lot of people that are shopping, but my point to you is that you were talking about as you get closer to
Christmas,
it's going to get more and more busy.
And that's what I'm trying to avoid.
Yeah, you're trying to avoid the coronavirus too as well.
Yeah, a lot more people, though, including myself, are shopping online. I think there is some element to going out every once in a while and shopping at a store just to see if there's other deals.
Yeah.
Sometimes people get bored. I get bored sometimes. I just want to go and see if there's somewhere I can go to maybe get a deal or something. So
here's the thing. You know what's funny? There's only like one person right now viewing this thing. So I don't know if we are live, but it is counting live. Let us know if you guys see us out there. And also, is there any lag as far as the audio too as well? We would definitely appreciate that.
Yeah, it seemed like there's not that many people jumping on.
Yeah, normally people would just jump on, you know what I'm saying?
Yeah.
However, it is 4:20, which means it is time to smoke if you down. You want to hit this?
Yeah. Take it out in the call.
Yeah, that's right. Take it out the damn hallway.
That's funny.
But anyway, the good news is that this is pre-recorded anyway. Yeah. But on today's topic, we are going to be talking about, I said we are going to be talking about you are not ready to buy a home in today's market. And the reason why I want to talk about this topic is because I get a lot of people that call me and they always ask the same questions. Should I buy now? Well, that really depends on you. But one of the first things that I want to talk about is, people do feel like they're missing out on the boat, right? Mm-hmm. And this happens a lot. Like, when it comes to like stocks, when it comes to like Bitcoin, even like the housing market, people feel like they're missing out on something. And I understand that interest rates are like very low, right? Supply and demand. There's more demand than supply. And people feel like they're missing out on something, which causes them to question themselves, maybe I should buy something before I miss out on the boat. And remember, that has happened in 2008, right?
Yeah. Yeah. I think there's contributing factors, though.
Yeah.
I do think the news puts this frenzy out, the media.
Fake news.
Yeah, I think, well, it's just some people look at this and be like, oh my gosh, we should probably buy.
Yeah.
It's always about, we don't always coach on, say, buy now or whatever. It's timing for everybody's different.
Yeah. So remember this show. What this show is really about is just to educate you what's going on in the housing market. Only you know if it's a good time to buy.
Correct.
And these are the things that we are going to address today. And stay tuned all the way to the end of the show because I'm going to give you an update of the current housing market. And also, Dan is going to give you an update on the financing market.
That's right.
Now, today, I don't feel like popular at all because there's only one person watching us right now.
Is it us watching ourselves?
Yeah, that's a good point. Are we watching ourselves?
You might want to check that out.
But it says that we are streaming live and it's counting down. So the good news is this. We always have to collect data. We know that every Wednesday, if we do it at 2, there's a lot of people that do chime in. So now it's around like 4:30. So on the East Coast, it's probably about 7:30. People are having dinner with their family. People are starting to go to work. And that's why we do these recordings as well. So that way you guys can come back and take a look at the archives, right?
Yes.
And go back and watch them. So let's talk about this. Consumer confidence, core CPI. Let's talk about that, Dan.
Yeah. Consumer confidence plays a part in everything. All the way down to derivatives, anything you think about, when you're buying or investing money, even as big investors, it's about, do I have the confidence in the economy? Is there going to be employment? Is there going to be a vaccine? Is there going to be a stimulus check? Is gross domestic product going to go up?
Yeah.
So all the way down from the smallest person on the totem pole, all the way up to the big hedge fund investors or investors in general.
Yeah.
Confidence in everything is probably the biggest thing for what makes this all go.
And, I'm also guilty of this myself. It's like, I know that eventually the market is going to tank. However, I'm not too sure how far the market is going to tank, right? But it's like, I'm still sitting on the sidelines here, and I'm guilty of this too. It's like, should I buy now? Because what happens if it goes up another 30, 40% in the next couple years? So it's kind of a catch-22. But if you're just sitting on the sidelines and considering buying, but you're being hyped up by other people that are buying and you don't want to miss the boat, maybe you shouldn't buy.
It's true.
Do you see what I'm saying?
Yeah.
Because what happens if you do that, you make the mistake, you buy, then the market tanks. And I think the problem is that people, right, want to buy. They don't want to miss out the boat because they feel like they're left behind. And you don't want to be in a position where you're really buying because you don't want to miss the boat because you feel like you're going to make some money, but you're barely scraping by.
And I think that we talk about it, everybody's got that threshold for timing.
Yeah.
And, it's just like when you buy retail, you see all these people that are fighting over Christmas gifts and stuff like that.
Yeah.
It's probably not at that level, but people are still out there thinking, well, I'm going to miss my opportunity. That's what the real thing is. I'm going to miss my opportunity. Where am I missing it at? Low rates.
Yep.
And prices of homes are going up. And so if I wait till next year, this might not be here. So scarcity, that's what it's about. People think that there's some scarcity out there for not having opportunity, and they're willing to do anything that they can, even if it doesn't make sense to go buy a house or try to.
Another thing is that I always get asked, should I buy now? Like you mentioned, timing. People always want to time the market. That's like one of the hardest things to do is time the market. And the reason why I'm saying this is because you never know when the market is going to crash. And if it does crash, right, how much are we going to backtrack? Are we dropping 50%, 20%, 10%? Because what happens if you wait all this time, market does tank, but the correction's only at 20%?
Yeah.
but then interest rates has to get forced to go up. So you're pretty much paying the same.
Timing's a big thing. I'll tell you a quick story. I had a guy that I talked to I'd say about 8 years ago.
Yeah.
And he had a house he bought in 2006. Mm-hmm. And he ended up selling the house. I think he bought it actually in 2004, but ended up selling it in 2006. Yeah. And he literally sold it, I would say probably 5 to 6 months before the market had a problem. Mm-hmm. And when we came in, he was buying another house, and one of the real estate agents at the time goes, "Hey, did you have any insight on if, how did this happen?" He goes, "It was all just random luck. It wasn't like I was like, hey, I'm going to buy and then sell." He's like, "Hey, I made 100 to 150,000 off this house, a very quick, short window." Yeah. And he goes, "I didn't know it was going to collapse, but luckily I did sell my house," because then he turned around and bought another house and then pocketed a lot of that money.
Oh, wow.
This was like 2 or 3 years later, right? After the housing market, collapsed, whatever. And houses were what, 60, 70, 100,000. Mm-hmm. He made a lot of money off that. So
dude, he was looking like a superstar, huh?
Yeah. And sometimes it's just timing, or sometimes it's luck. Mm-hmm. Sometimes things just work in your favor. Yeah. That's what happened.
Wow.
So timing. It's a big part. I mean, we don't know. And the whole thing to that story is that nobody really has, like you said, that crystal ball.
Yeah. And I remember this one time, when I got into the real estate market, I didn't have any money at the time. Mm-hmm. And like you said, it is all timing. And it's like when I bought my first investment property, I think it was probably like 2000 and maybe 2013, 2014. Right. And this is when it was like at downtown, the Tony Hsieh, Zappos thing, all the hype was going down there. And these properties are like, $20,000, $30,000. And I remember, right, when, I bought my first property, it went up to like 40,000, then 60,000, then was like 80,000 in these neighborhoods. And I was like, I'm not going to pay anymore because I think that there's going to be a bubble. There's going to be a crash. Right. And I remember this where I had a duplex under contract with you, and I also had another house under contract with you. And I didn't pull the trigger on those properties because I thought the market was going to crash. Mm-hmm. And again, those homes today are now worth $200,000 for the duplex, and that house would have been worth about $250,000.
What's the appreciation in that? I mean, how much equity do they have in there?
Well, I mean,
from when you first bought.
No, I'm talking about the ones that I didn't buy.
Yeah, so let's say if you bought it at 80,000, mm-hmm. You're saying you would have had 120,000. Additional equity in the property right now.
Okay, so on that duplex, at that time we were under contract for $80,000 on the short sale. I didn't pull the trigger, so now it would have been worth about $200,000. So that's today. So that's 120. And on that single family residence, it's worth about $250. And during that time, I could have bought it for I think 90. Wow. You see how much money I lost?
That's a punch to the gut, man.
Look, I'm in the business. Yeah. And it goes back to timing. You just don't know when. Right? Mm-hmm. And I literally thought the market was going to crash, but it just kept going up and up. So this is just a prime example where nobody has a crystal ball. You don't know which direction the market is going to go, left or right. And you can't sit there and wait based upon timing, like you want to buy at the right time. Mm-hmm. The right time really comes down to your situation and your family situation. You see what I'm saying?
Yeah, it does. I think everybody, is going to seek guidance, but at the end of the day, you're going to make that decision, and you're mm-hmm. right. It's going to come down to, where you're at, where things are at.
Another topic I want to talk about is over leverage. Mm-hmm. Okay. If you are thinking about buying a home, right? And let's just say you got great credit, you can get finance, and let's say you're maxed out to $600,000. Mm-hmm. Okay. Do you want to spend all $600,000 in that home? And here's why. Because if you're maxing out and you're leveraging out, you don't want to be in a position, should the market backslide, mm-hmm. right? You're not going to feel good, because if you lose your job and what's going on in today's economy, especially if you're not an essential worker, right? You could literally lose that house. Yeah. And you probably want to go in there with some savings. And I mean, you're the finance guy. I mean, let me know, all right, with your honest opinion here. When you get people approved for a home loan, okay, Do they typically max out on the home? Because from when I take clients out, we normally max out.
I think here's the problem that people look at is they're trying to buy a house that meets all their needs.
Yeah.
And when you go and you search for a home, in some cases, and here, especially in Vegas, with the appreciation in homes going up, some of those needs might not be met.
Yeah.
And so now they're looking at, we talk about new home. They're really looking at, well, what is out there for, let's say this price point.
Yeah.
And a lot of times people go up, and the reason they're moving up in purchase price is because they can't find what they're looking for. There's some competition. And then let's be honest, it's very desirable to have a new home. So I think a lot of people get wrapped up in the moment. They get wrapped up in, well, if I'm going to buy a house, which is usually the biggest investment a middle-class person makes in their lifetime, they want the biggest and the best.
Yeah.
And is it financially stable for you to do that? I don't know. That's your decision. But I do think that a lot of people go for the max approval because they just, everybody wants the most, the best that they can get. And when they talk about cars or they talk about houses, those are usually the biggest investments. So I think they do max out majority of the time.
Yeah. And when we talk about maxing out on a property, okay, the first thing that you probably should do is take a look at what the average price point for a home is. And, see if you can kind of hit your 9 out of 10 items.
That's right.
If you can, right? Don't overextend yourself. And that's where I see a lot of people going wrong, especially when people even buy like cars and stuff like that.
Yeah.
Now, there's one thing that I did that was so stupid of me, and I was like, this is the reason why people were not logged in here, Dan. Okay? This thing is live, but it's not public. It was only for like private.
I see.
So now I had to switch it to public.
I thought there was something.
Yeah,
man,
I know. I was like, why are people
because
not
you usually
in?
jump on right away, and it's like,
People are just like, at least 2,000 people are just hitting it. Boom, 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 boom. Isn't that crazy?
No, it's crazy, but you know what? Things happen, man.
Yeah, it is what it is. But however, the good news is that they can go back and watch the video. So now people are starting to stream in. So if you guys are starting to stream in here, if you guys have any questions, let us know. So today's topic, we are talking about you're not ready to buy a home here in Las Vegas. Okay. Now, another thing that I want to talk about that's also important is short term. And what I mean by that is when people call me and we have a discussion of if they should buy a home or not, one of the first things I ask them is, how long are you planning on living in the property? A lot of people will say, 2 years, 5 years. And I tell them, if that's the case, based upon speculation, maybe you may not want to buy a home, and here's why. Because I feel like we are probably at the height of the bubble. Could we see a backslide? Yes. But you have to be prepared. And what I mean by that is you have to go into this of knowing that there could be a potential crash, and if it is, can you weather out the storm? And if you're buying based upon, I'm going to speculate because I'm chasing the herd, I'm following everybody else, I don't want to miss that boat, right? And that was the first topic that we talked about. All right, missing out.
Yeah.
You see what I'm saying?
Yeah. It's hard because I think people want to make wise decisions.
Yeah.
They seek help, they seek information, especially for financing or, real estate. That's why you have financial planners and, you have people who go through life insurance, all this stuff, because they're trying to plan.
Yeah.
And when you look at homes and you look at things that people want to buy, like, for instance, they want to get into a house, and do they know if they're going to be there 2 to 5 years?
Yeah.
I almost think they're not really thinking about that sometimes. They're almost thinking about, is this an investment for me?
Yeah.
Especially people that are younger or that are just like, hey, you know what? Where do I plant my money if I have money? Or, I always say if you need a home, it's a primary residence, buy a home. But I think a lot of people look at it as, yeah, I might be in there 2 to 5 years, but if I plan to leave, I plan to leave. What else am I going to do with my money, though?
Yeah. So you make a good point. So if that is the case and you are in that situation, and this is what I advise my clients, again, you probably don't want to max out your total debt to income ratio, right? Because the reason why is because should you decide to move, you may want to rent this out. And this is where I'm going to segue into. So the first thing that you're going to do is, we're starting to have a lot of people stream in, by the way. First thing that you're going to want to do is, if you know that you're probably going to be here for like 3 to 5 years and you're planning on renting out the property, you need to make sure that the rents are going to be higher than the mortgage, okay? And typically, how do you identify that type of home within that tier price point? Is the first thing you got to look at is, what is the average household income? In this state is $51,000. Now, based upon somebody that's approved for $51,000, how much of a home they can actually qualify for, right? Now, based upon how much of a home that they can qualify for, now you start to look at homes in that price point. Now, homes also in that price point, you should have a minimum 3 bedrooms, 2 bathrooms, 2-car garage. Location does play a key. And the reason why I'm bringing this up is because should you decide to leave, number one, you can rent it on out, make some cash flow. And the reason why you don't want to max out of your debt to income ratio is because should you transfer out of state, right, you may want to buy another home somewhere else.
I think that brings up a good point. So I think what I'm getting from what you're saying is, if you buy a house and you decide to buy a house, there's really a lot of ways you can win. Because let's say you don't stay in the house, and let's say you want to rent it out, you're going to still make a profit. Yeah. Right? So for me, I look at it as, if you're buying a home and you know you're going to be in an area for a period of time, I would say that, definitely invest your money into that as far as getting into a property, because like you said, you can always turn and rent it out. Yeah. You can always turn and sell it. Again, I think it comes down to that, do people want to put their money into that? You got a lot of people putting their money into other things, but is a house a wise decision to put your money into? Yeah. And I think it is, if you look at it from that perspective.
Correct. So now we're going to get into a part where we're going to be talking about the current market conditions and what is going on. So the last time I did this video, the average price point for a home across the valley was $417,000 at $189 a square foot, with the average days on the market 32 days. What do you get? 3 bedrooms, 2.5 baths, right? Roughly about 2,100 square feet a home. Today, for the average home, you get about 2,200 square feet. You're not going to believe what the average closing was for a home.
What?
Take a guess.
The average closing for a home?
Yep. What is the average home price?
$470,000.
Ooh, that was way too high.
Really?
We went from $417,000 to $445,000.
Wow. That's a short window, though, to do that.
Oh, my gosh. The market right now is unbelievable.
Yeah, it's hot.
Right now. I'm going to tell you, the average price per square foot right now is $195 a square foot, but the average days on the market is about 36 days. However, I've been running across some challenges now. Home pricing around $550 and below, they are moving pretty quickly.
Really?
Yes. And also, believe it or not, what is happening is supply and demand. It's becoming a bidding war. We have about 5 weeks of supply of inventory right now. Right now, we have 3,836 homes currently available. And the average that is currently listed right now is at $220 a square foot at $687.
Wow.
$87,000, I'm sorry. That's currently listed, 2,700 square feet. That's just the average across the board. Now, the median that's currently listed is about $398,000 at $194 a square foot. So believe it or not, the month of December, things are moving along.
Yeah, I don't look, man, I see applications coming in. I don't feel like it's missing a beat.
Gotcha. Also, there's a couple new communities that are opening. And the reason why you want to listen to this radio show is because this is where we tell you all the new communities that are coming up on the market. This is something that you guys can definitely benefit. I had some clients where we announced a community by KB Homes out in Echo Park. A lot of our clients reached on out to us. I was able to get them into the door before the community opened, and they were the first to pick the track. So there are a couple of communities that are coming up. Some of you guys do like the Pardee homes, the mid-century modern homes. Pricing range anywhere from about $450 and up. So if you guys like those style homes, you have a community called Strata 3.0. It's coming along. That's the number one banger right now. So let me know. I'll connect you guys with the right people. Okay? So we talked about this. If you want to be in equity position. Now, can the market crash? Yes, the market can crash. Disclosure. And I'm only saying that so that way you guys don't knock on my door and chase me down. Right? So now let's get into the financing with Dan. What do we got?
What's going on, guys? So there we are. Let's talk about mortgage rates. Negative reprice risk increasing, and it's entirely because of what's going on with, you have the vaccine and the news for that, also the stimulus package. And so what's happening is bond prices are going down, which has an inverse relationship with mortgage rates. And so what's happening is rates have increased slightly, not crazy.
Yeah.
You look at this stimulus pitch, bonds do lose ground after the new stimulus pitch that went out. The stimulus package that's going on right now may include eviction, moratorium, and $25 billion in renter assistance. The next stimulus package may include relief for renters struggling in the pandemic. So that's something to pay attention to. Mm-hmm. Have you seen an impact at all, or have it been a part of anything about what's going on with renters and also investors with what's going on here in Las Vegas?
You want to know something? It's so quiet out here. I haven't heard anything.
Yeah.
The only thing that I have heard a lot of people are trying to, file for the evictions, and they are backed up on the courts. But I mean, right now everybody's like really leaning towards buying a home.
Right. Okay. And then the other thing I want to talk about
it hasn't affected the market. That's what I'm saying.
I don't think I don't have any personal experience.
Yeah.
With something like that happening, or even know that, hey, this is a big topic here.
Yeah.
But it seems like it is a big topic, and it keeps being brought up in the news.
Yeah.
So it's something to pay attention to. I don't know what's going to happen. I have a lot of people investing that are saying, well, we're going to continue to wait to see what happens. Well,
yeah.
There doesn't seem like there's a lot of traffic either way.
Yeah, I mean, it's only going one direction, and that direction right now is going up.
Yeah, I don't see anything happening. Goldman Sachs also has brought up that in 2021, GDP will be at 5.3%. And a lot of it is because the stimulus package that they're still coming out with, that's going to help. And also the vaccine, which everybody should be able to have. I think it's like the end of the second quarter.
Talking about Goldman Sachs, and we always talked about this migration patterns. You know, Goldman Sachs is moving to Florida, right? For tax purposes. Yeah, they're moving their whole corporation out there, dude.
Speaking of tax purposes, there's a lot of big companies, like one, we'll say Apple, which I think this is old news, but they do go off, out of the country to save on taxes.
Yeah, of course.
And it's crazy because, as much as these taxes are being proposed and all these things, it seems like they're just never paying the amount that they need. It's crazy. Mortgage applications, they decreased 1.2%, seasonally adjusted basis last week. Refinance volume's back up, though.
Really?
Yeah, and I think there's still people out there that are still trying to take advantage. It seemed like when people start to see like the end of the year, they hear the same news. Rates are great. But some little spike, it could be rates got better just today or that hour or that, that specific day. And all of a sudden, boom, everybody's putting in applications.
See, and that's where we go back to like how, you watch something or you hear people talk about something and people just like follow the herd. You know what I'm saying?
And everybody always calls me about rates.
Such a big influence. You see what I'm saying?
They call me about rates all the time, and they're always saying, what about today or what about tomorrow? And the thing is it's been a consistent trend of rates doing very well. But tomorrow, there's going to be some news come out with jobless claims. We have the Consumer Price Index and the Core Consumer Price Index. That's going to be some high activity on rates if that does go.
That also affects the market, right?
It does.
Can you explain why right after that, please?
So overall, what this does is it really comes down to consumer confidence again. But really what happens is that this will affect investors on how they're going to invest their money.
How does that affect it?
Well, I think
Give me an example.
Well, look, okay, so if things go well,
Yeah.
The market goes well, investors are willing to invest their money. That's just the reality of it.
And what do they invest in? Like they buy more bonds, right?
They buy all types of stuff.
Stocks, bonds.
Stocks, bonds. They buy, I don't know, derivatives. They buy all kinds of stuff. The point is, these investors are the ones that really make a difference. It's not somebody like me going on on E-Trade and trading stuff. So depending on what happens, this is going to determine if rates. Now, when we talk about rate swings, it's a very minute situation. It's not like they go up a quarter of a point or half a point and then they drop.
Yeah, so
a point.
It's basically you're not making a mortgage payment from, $400 more, right?
Yeah, it's just a very slow. It's a very small, subtle. But why that's important is the same person that could maybe get a discount. Let's say that they wanted to lock their rate. That rate now might be a higher cost if they're buying the rate down.
Yeah.
Now, also in turn, to go 1/8 of a point, it takes a huge difference. But that might be closer, inching closer. That if the trend keeps going that direction, now you have 1/8 of a point higher in rate.
Can I ask you back to consumer confidence, leading right into this? So if you have investors that are confident, with unemployment and all that stuff, where the numbers are coming down, the economy is moving, they go back out and they buy treasury bonds, like 15, 30-year bonds. How does that impact the housing market? Kind of explain that part.
Say that again. I'm sorry.
So like investors, right? So tomorrow.
You talking about short-term bonds?
Well, short-term bonds, long-term bonds. How does that impact the housing market when investors come out?
It doesn't impact the housing market. The short-term bonds, what they do is they impact things like student loans. And what that does is it helps consumers out there basically have more money to spend.
Yeah.
So if the cost for them to go get that student loan or their credit card interest rate is lower than what it normally would be, and now it's decreased, the whole purpose is to stimulate gross domestic product. So that's why when the Fed comes out and is like, we're reducing rates, really what they're reducing is those short-term bond rates. So that way you as a consumer can now go out and spend more money, right?
Got it.
And that's where it's at. It's really a way to stimulate the economy. So that's something to look at. Now I want to say a couple other things about we talked about this before, but I want to make sure this is clear. So I had some data that came out, and some of this data was not as accurate because we were still trying to figure out the numbers. We had base loan amounts go up for Fannie Mae and Freddie Mac. They didn't go as high as we wanted to. I thought it was going to hit 558. It's actually 548,250. So that's a base loan amount. That's final, and that's for Fannie Mae, Freddie Mac. Now here's the thing about that. Is if you're a person out there thinking like, well, I got to wait till 2021 to take advantage of that higher loan amount, we can do that now.
Do it now.
Also, FHA has a loan amount right now of 262, so it's a little bit higher. I had it at
262. You ain't getting none for 262.
362.
Yeah. You still can't get enough.
I know, right? But that's good because now we have an extra, 7,000 of purchasing power for a consumer out there. But what I was looking at, it was 356, I believe is what it was.
Yeah.
And now it's going to be 362, 250. So that's base loan amount. So, those numbers are great. And you can take advantage of those loan limit increases today.
Yeah. If
you started the application and got on it today, we can get you approved for a higher amount. One other thing I'm going to say about this, Chuck, and I love talking about some things here. When it pertains to clients, our thing is now a good time to buy and why you shouldn't buy. Well, what I do encourage people to do, which I see a lot, is put the application in and let's make adjustments as we go. Doesn't mean we have to pull your credit. We can talk about things. I prefer pulling credit, but there's a lot of people out there that really don't know how to get started or really what's needed. Also, can they afford a home at $500,000 to $600,000? I see a lot of people doing that, and I think that's a good thing to do.
So where you're going to go is you're going to go to lvhomeexperts.com. Here's the financing tab here. You're going to click the financing tab and click the start button. This takes you to the guru, Dan French, right? This is where you're going to go hit apply now. Also, if you guys have not had a chance to view that video as far as how much I was able to get qualified for, check out that video. I'll have that in the link in the description below. Also, coming back to this right here, let me go back to our display page. If you want to go to the search button right here, basically you can start to search homes right here in lvhomeexperts.com as well. And I want to get one more question out of you, Dan, on this. we talked about refinancing. You've seen a tick up on the refinancing. Do you think now people are starting to make those adjustments as far as like their financial situations? They're looking at their situations. We're coming in towards the end of the year. They are looking at their financing. They're making readjustments. Is that what you're seeing? Or do you see a lot of cash out refinance, taking that money to pay off their debt, or they're taking that money and going back out and buying stuff? Or are they taking that money to buy more property? What are you seeing with that?
I see buyers. I wouldn't say buyers. I see people that own homes.
Yeah.
In a world right now where they're constantly evaluating and pivoting.
Yeah.
Even if you did a refinance or you purchased a home a year ago, they're looking right now as saying, okay, maybe I can still improve my rate, even if it's a quarter or a half a point. I really feel that the media and everything that's going on is really spiking these refinance applications because, like, let's face it, it's just like sales. Anything that goes on and you say, okay, rates have gotten a little bit better. Oh, they have? Let me try and see what's going to happen. So to answer your question, yes, people are always, especially now, uncertainty is going on. Everybody's looking to save money, reposition. And there's some people out there that still want to take equity out of their property and reposition and pay off some of the debt that they have.
All right, so we're about to end the show here, and we're going to start off with the final thoughts. Any final thoughts, Dan, before we let everybody go?
No, like I said, I mean, go to the website, fill it out. Don't feel like, I always say there's never a point where it's not too soon, I would always like to help out and try to answer questions. Even if people I have people fill out applications and don't even put in their social. At least we go over the process, and I think I'm encouraging that. So
you're really just kind of giving them the general idea as far as this is what you could be approved for and how things work. Yep. Which I think is really great. Hey guys, again, thank you so much for tuning in to the LV Home Experts radio show. This is where you're going to get the honest truth information. We're going to tell you how it is. If you guys have not had a chance to subscribe to this channel, go ahead and click that subscribe button. Also, don't forget to give me a thumbs up too as well. Other than that, until next time, everybody, and have a blessed day.